Hi, I'm Tom Lydon, editor of ETF Trends here in San Diego at the Schwab Impact Conference. I'm here with Martin Kremenstein, who's head of ETFs at Nuveen Investment. Martin, great seeing you.
Great to see you too, Tom.
So Nuveen, one of the preeminent leaders in fixed income investing, you guys just entered the ETF space in kind of a unique way. Tell us about it.
Yeah, sure. So we launched NUAG, the NuShares Enhanced Yield Aggregate Bond ETF, on September 15th. It's a strategic beta, if you like, attempt to enter the aggregate bond market, core bonds, and really try and break that link between issuance weighting and weighting in your fund. And so what we decided to do was we looked at what are the main drivers of return in fixed income, in particular in the investment grade space, and it was yield. And so we built an index and a fund that was going to use yield as the main driver of weights.
Okay, so you're looking for a greater yield as far as the weight, is that correct?
So the idea is you take the aggregate universe and then using very strict guardrails, you weight up high yielding sectors and weight down lower yielding sectors. Our fixed income teams divided up the aggregate universe into 38 separate buckets. So you've got governments, you've got three sectors of corporates, financials, industrials, consumer, you've got asset-backed, and then you've got agencies, and then you have the credit spreads, credit ratings within there, and then also the durations. And so you've got that matrix of different asset classes, durations, credit rating, and you're really like overweighting the sectors that have the highest yield and underweighting the ones that have the lowest yield, but doing it in incremental ways so that you're not taking massive swings for the fence. It's it's an incremental way designed to eke out extra yield over the long term for investors.
So would your portfolio team have had a hand in building this? I mean, Nuveen's been very successful over the years navigating the ups and downs of the fixed income market. Would they all have some input in this strategy?
So one of the things we wanted to do when we built out the NuShares brand is to really tap into the centers of excellence within the greater TIAA organization. So it's not just the historical and heritage Nuveen, but also the heritage TIAA asset management, TIAA global asset management. So, you know, on the tax-free side, the Muni is obviously Nuveen is obviously a preeminent Muni asset manager, and then on the taxable side, TIAA is one of the largest fixed income asset managers out there. And so we went to those PMs in the quant and index team and said, can you build us a really good strategic beta solution for core fixed income? And it's something that I'd actually been working on for a while anyway, and this is what they came up with, and it's an incredibly rigorous solution to that question.
So you kind of get the best of both worlds of both teams.
Yeah, I mean, we are able to I mean, it's, overall I think TIAA has $900 billion in assets under management, or close to, and we're able to reach in across the organization for asset class and strategy experts across the full investing universe. It really is a phenomenal opportunity to bring product to market.
So we've had a 30-year bull market in bonds. We're all very, very close to December. Fed may be doing some tightening. We're looking at rising interest rates. Timing probably is pretty good here. Are you confident on that?
Yeah, I think so. I mean, for a start, investors have made a lot of money out of the price return on bonds because we've had this bull market. But actually, if you look long term, most of the returns have still come from yield. And so when you reverse that bull market and the price returns are going to potentially become negative, the excess return you can pick up in yield has become even more important. So yeah, we think this is a great time to launch a product like this.
Excellent. So ticker symbol again?
NUAG, NUAG.
NUAG, great. Martin, as always, great seeing you. Thanks.
Likewise, thank you.